Well, we had a little bit of pleasant surprise this morning with the GDP numbers for the third quarter coming in at 2% growth. The expectation was for less than that, about maybe 1.7. Remember, the last quarter was 1.3% growth. So we had a little bump up in the third quarter. And frankly, I think we'll probably have another little bump up for the fourth quarter. As I said in our annual letter sent to you in early February, that I believe that this year we were going to have about a 2% GDP growth, and that was much less than the official numbers predicted at the beginning of the year. And I think that's what we're going to come in at, 2% GDP growth. Earnings season is over half through. Earnings have been a little disappointing. We knew they were going to be weak. We knew that the estimates were ratcheted down all quarter long, and they have been weak. And some of them, the big boys, the big bellwether companies, have been a little disappointing. And they have guided down further for the fourth quarter. To me, what that means is we're setting ourselves up for a surprise to the upside. I know that sounds optimistic, but the economic numbers that are coming in the last couple of weeks are getting better and better and better while we're having our correction in the stock price. It was interesting, if you remember, that during the summer, the economic numbers were getting worse and worse and worse, but the stock prices were going up. We're having just the opposite now. This is an opportunity to buy, in my opinion. We got the elections coming up in, 10, 11 days? I don't remember exactly. Was it November 6th, I think? We have the fiscal cliff by the end of the year. Those two issues are going to be resolved, and once they are resolved, or the election obviously will be resolved at a certain time, but once the fiscal cliff looks like it's going to be resolved, or they're moving strongly to resolve that thing, the market's going to take off. Before that, you're going to see volatility. So during this period is where you want to get in position to take advantage of the next run up, because we're going to probably have one. The chances are very high. Durable goods numbers were big this last month, September, up 9.9%. But remember, it was down big the month before, all because of airplanes. You take out the airplanes, take out transportation, and durable goods were up 2%, which is not bad. Other economic news, there really wasn't a lot this week. The only thing that was surprise was probably the GDP number. And remember, that gets revised 2 more times before we know exactly what it was. So I think you need to take advantage of this weakness we're seeing in the market. Don't be overly aggressive getting in, but take advantage of it.
If you're an iPhone user, there is now an easy way to get InvestTalk delivered right to your iPhone or iPad without having to sync the device to your computer. This feature can allow you to listen to InvestTalk right away, as soon as it's published every weeknight. Here are the easy steps to get this done. First, make sure you have installed the latest iPhone update. You then can download the podcast app from the App Store. You can do this as you would add any app on your iPhone or iPad. Once you have the new podcast app installed on your device, if you're not currently subscribed to InvestTalk, just search for it in the search box. And remember, there are 2 T's in InvestTalk. Make sure your subscription is turned on and the auto download is also turned on. Your episodes will now be delivered automatically as soon as they're published. Let us know how you enjoyed the InvestTalk podcast, and do us a favor, leave us some feedback on the podcast in the iTunes Store. We love hearing from you, and thanks for listening.